Yo boys, if you don't do this, you need to do this. Let's do some top-down analysis. I'll start on the weekly time frame, well, on the monthly, and draw out psychological levels, so we'll do that now. Psychological levels just basically means like any type of support or resistance. So there. Where else do we tap? There. 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 Here we tap a few times, price comes above. See where price wicks, but when it hits it drops, wicks it drops, wicks it drops. And then we run through, hits level, we drop, so this is now a key level for banks to sell. Then we drop onto the weekly time frame after we've got our psychological levels drawn out. And we'll look for any trend lines. Don't get lost in the left side. We want to be, because this is still a huge pip range to break down. 1, 2, 3, 4, 5 points on this downward trend line, and then we've got a small trend line here, 1, 2, 3, to basically just shorten it down, put us into that range where we can really see what's going on in the market. On the daily, we see we've got our prominent low there with that where that trend line started. We've got this trend line up here where price could tap into again. Banks can sell at a discounted price. See with the wicks out on the 4 hour, draw the most recent support and resistance. There and there. When price taps into these areas, it's reacting. And if it breaks through, then that's an easy buy. Draw that on the 4 hour. Even here, if price was to come back up to this trend line, tap into it again, and then drop or even break through after another tap into this trend line, that's 238 pips. That's crazy. Just using higher time frame bias. Keep coming down, keep just looking at the trend. Swing point down here. Just waiting patiently for that tap on those trend lines. And always trading in a decent range. So this price range is a 300 pip price range where we can pick a high probability setup and ride the wave. And this is exactly what you need to do. Look at the higher time frames. Don't get caught up in the lower time frames because there's too much noise. You got to realize that central banks and the market movers, they don't trade on these lower time frames. They trade on the higher time frames, like here, swing point, sweep of liquidity, break of structure here, the retest of the fair value gap. Easy sells from this support zone that gets created right there. Back down to this level, this trend line. Don't know why this is this colour. 244 pips, the strategy working. Look over this video as many times as you need. And if you want me to do an in-depth market analysis, top-down analysis video on my YouTube, I'll do it for you, man. Make sure you watch till the end.